Look at me. Are you listening to me? Today, we need to have a serious, honest talk about a name that might be popping up on your phone, in your emails, or maybe your adult children told you about it. I am talking about an app called Grid Money. Now, why are we talking about this? Because you are either retired or you are standing right on the doorstep of retirement. And when you reach this stage of your life, your relationship with money has got to change. You are transitioning from a life of making money to a life of protecting the money you have already made. Every single dollar you own needs to be guarded like a hawk. But modern technology is moving fast, and there are all these new digital tools, apps, and platforms claiming they want to help you manage your money, give you an advance, or boost your paycheck. One of those names is Grid Money. You might be asking yourself, how does Grid Money work? Is it safe for me? Should I be using it? Let's strip away the fancy marketing and get down to the absolute truth of what this is. Grid Money is a financial technology app. It is not a traditional brick-and-mortar bank where you walk in, shake hands with a manager, and sit down at a desk. It operates entirely on your smartphone. They offer a few specific things: cash advances up to $200 between paychecks, a feature called Pay Boost that lets people get a portion of their yearly tax refund early scattered across their monthly paychecks, and tools to help build credit scores. Now, let's talk about the fear. Why does an app like this cause confusion or anxiety for someone in their 60s or 70s? Because you have spent your entire life operating under a specific set of financial rules. You understand banks. You understand credit cards. You understand interest. When an app comes along and says, hey, we'll give you a cash advance with zero interest, no credit check, just pay us $10 a month, it sounds too good to be true. And your gut instinct, that beautiful, protective financial radar you've built over decades, starts flashing red. You start worrying, is this a scam? Am I going to link my hard-earned checking account to an app and watch my retirement savings vanish? What happens if I use a service like this? Is it going to hurt my credit score? Let me ease your mind on the security front first. The app uses standard encryption and partners with FDIC-insured banks to secure transactions. It is a legitimate fintech app. It is not a shadow corporation designed to steal your identity. But just because something is legitimate does not mean it is right for you. Here is the core question you need to ask yourself. Does Grid Money align with a secure retirement lifestyle? Let's look at who this app is actually built for. Grid Money is designed for working people. It is designed for hourly workers, people living paycheck to paycheck, or individuals who are struggling with a low credit score and need a small bridge of $100 or $200 to buy groceries or gas before their next payday. It is designed for people who have regular W-2 payroll deposits or are expecting a massive tax refund at the end of the year that they want to access early through the Pay Boost feature. If you are retired, or if you are about to retire, your financial ecosystem looks completely different. Your income isn't a bi-weekly hourly paycheck anymore. It is Social Security, it is a pension, or it is a structured monthly distribution from your 401k or traditional IRA. You do not have a standard paycheck to boost. Furthermore, if you are expecting a massive tax refund every year in retirement, we need to talk. Because that means you are over-withholding on your retirement distributions and giving the government an interest-free loan that you shouldn't be giving them in the first place. Let's do some simple, honest math together, because the math never lies. Grid Money charges about $10 a month for its subscription. That is $120 a year. If you are signing up for this app primarily to access a $200 cash advance when things get tight, you are paying $120 a year for the privilege of borrowing $200 at a time. Do you realize how high of a percentage that is relative to the amount of money you are accessing? It might not be called interest, but it is a fee that eats away at your fixed income. In retirement, a fixed income means every dollar is precious. You cannot afford to leak $10 here, $15 there on apps, streaming services, or subscriptions that do not actively grow your wealth or protect your peace of mind. What about the credit building feature? You might think, well, Susie, I want to make sure my credit score stays high in retirement. Let me ask you, why? If you already own your home, or you've downsized and paid off your mortgage, and you aren't looking to buy a new fleet of cars on financing, you do not need to obsess over your credit score the way a 25-year-old does. You do not need to pay a monthly fee to an app to maintain a credit rating when you should be living a cash-based, secure lifestyle. So, what is your actionable takeaway here today? If you are retired or approaching retirement, your goal is financial autonomy and simplicity. You want to reduce the number of hands in your pockets. Your action plan is to steer clear of cash advance apps and instead focus on building a true, liquid emergency fund right inside your local bank or a high-yield savings account. You need a buffer of 3 to 6 months of living expenses sitting in cash. If a surprise expense pops up, a medical copay, a broken refrigerator, a car repair, you do not want to be logging into a smartphone app requesting a $200 advance. You want to transfer that money directly from your own savings, completely free, with no strings attached, no monthly subscriptions, and no technological hoops to jump through. If you currently have a grid money account because you thought it would be a handy tool, I want you to look closely at your statements. Look at what you are paying, look at how often you actually use it, and ask yourself if it is serving your higher financial purpose. If it isn't, cancel the subscription, unlink your account, and consolidate your funds into a trusted financial institution. Technology can be wonderful, but your retirement security relies on old-fashioned financial discipline, living below your means, keeping your money accessible, and avoiding unnecessary fees. Protect what you have worked so hard to build. Stay safe, stay secure, and remember to value your money, because if you don't, nobody else will.